What's up, YouTube? Stocks by the Numbers coming to you as per request with a quick review of another company that someone asked about, 3D Systems Corporation. Ticker symbol DDD, listed here on the New York Stock Exchange. Stock right now just a touch below $10 a share here, dropped down here on the day, $9.97 a share, down about 1.5%. Let's get into it. $1.3 billion market cap. They're losing $1 a share. So this company has been dealing with some inconsistencies over the last several years, really, not even the last several quarters. Big misses here, 2 out of 4 on the EPS side last couple of quarters. However, coming in with nice beats, slowly pulling back, looking like potentially may come in line with estimates rising and actuals slightly decreasing. So you could potentially see maybe an in-line EPS here, Q1 of 2023. However, annually, again, 2018, 19, 20, consistent decreases. Obviously, this was a rough year. Came back in 21. Obviously, numbers look good. I don't know if they received any stimulus money or anything like that. Really insignificant, because overall, the company pulled back again with the revenue and its income in 2022. So regardless of really what the hell story was going on in 21, it really doesn't matter to us, right? Because the numbers don't lie. So coming off the terrible year of 2020, 557 million, the company now supposedly, when everything's back to normal for the most part, revenue came in, what, like 5% lower than back in 2020, sitting here at 538 million. So this company's definitely struggling. Even if you switch over here quarterly, I'm happy to see the profit margin rose up a little bit there. However, still significantly negative for the last 4 quarters, basically minus 20% plus, with, of course, revenue bouncing from 150 million down to about 132 million. So for the last 4 quarters, again, the company has definitely been struggling. According to TradingView, when your price target is just a little bit higher than where the stock's currently trading, that really means nothing to us. Let's look at these numbers here. And the one thing I will say is here, they are in line, basically, slight beats with yearly revenue, and of course a miss there in 22. And then for 23, look, estimates of only 556 million. So they know that this company is struggling, and they're basically even putting out estimates of slight decreases quarter over quarter, year over year. However, the EPS for 2023 looks to make a little bit of a jump. Last year they posted actual minus 23 cents a share. This year looking for minus 16 cents a share. One thing I will say here is that, first of all, you see the debt absolutely explode from 79 million to about $500 million, and the cash here was almost 800 million in cash, now pulled back to sub 400 million in cash here, going from 21 to 22. So the company has maintained its debt, lost about over 50% of its cash, really. However, look at the assets that this company's holding: 800 million in short-term assets, 600 million long-term assets. So the company has total assets 1.4 billion. Liabilities are about half that, at about 700 million. Okay, so they do have, some roughness, if you will, on their balance sheet. And basically, if you read some of the recent news articles, they've even been trying to do some restructuring in their business to, of course, try to lower costs and increase profitability. But if we look here, obviously, cash from all activities here are basically negative. The income statement, again, the revenue was almost 700 million, and then basically just started pulling back to now low 500 millions. The cost of goods sold has basically maintained its value here at roughly minus 300 million, bringing in profit, gross profit, I will say, of about 200 million, and then the operating expenses also roughly 300 million in change. That is why they are operating at a loss. And if we look at these statistics, this is what I wanted to show you guys over the years. First of all, 2.4 times sales. Not the highest it's been, second highest it's been, though, in all of these years, looking like a median average of about 1.6, 1.7 probably. So sitting here at 2.4, we may be due for another slight leg down. Price to book, 1.77, not the highest, just coming off the lowest it's been, though. However, the company's kind of been shitting the bed on the business side, right? So it's understandable that they're trading at the lowest multiple of book. But here are the numbers that no one likes to look at and everyone likes to gloss over. However, in my opinion, they're some of the most important metrics. Return on assets bouncing around, had a nice big pop to positivity here, and then, of course, pulled back to minus 8.2%. Return on equity goes from negative to positive and pulls back to minus 15%. Return on invested capital, same thing, 35% pulls back minus 9.5%. The gross margin percentage has been bouncing around here. High 40s comes down to low 40s, dips to sub 40, and now rebounds back up to 41.1. So, I mean, really not showing us anything good or bad. However, before this big dip, I'm sure if we did the average here, it's probably like 44, 45%, and now they're at 41.1%. So, still a little bit of work to do in my eyes. The operating margin, again, hugely negative. Well, not hugely negative, slightly negative, I should say, going from about minus 9, 8% down to minus 5%. And now pulling back to over minus 21%. So the company seems to be struggling a little bit. This is why I'm saying, I understand the story, and I understand years from now it may even blossom into an even more profitable company. However, right now they really seem to be struggling. EBITDA, once again, earnings before interest, taxes, depreciation, amortization. The EBITDA margin was slightly positive, goes slightly negative, rebounds, and then takes a massive leg downward here at almost over minus 13% currently sitting at. Recipe for disaster. The net margin percentage we looked at before sitting at about minus 20% here going back for the last couple of years. The inventory turnover, if you just watch the Enovix Corporation breakdown video that I did, that's a silicon lithium ion battery company, and their inventory turnover was increasing significantly quarter over quarter for the last several quarters, which is why they had to, they're building their high production facility in Malaysia. You guys can go check out that video, but long story short, the higher the inventory turnover, the better. That means they're turning over their inventory and they're doing good business. As we see here, these are very, very low numbers for the inventory turnover for 3D Systems, and you can see here for the last couple of years just in a steady decline. Basically the lowest inventory turnover over the course of the last 7 years. So that's why I understand the company's holding good assets, and they've been selling off, so they might not go much lower. However, again, it's really not looking like this is something I would jump on board with. Revenues again have come down 130, and look at next quarter, 127, 141, 140, 147. However, only a year ago they were doing north of 150, even 160. So that's why I'm really not seeing this for the big picture. The EPS by 2025, the company expects to be very profitable. However, it's only off of 690 million. 600 million, 556 for this year. So, I'm just not getting it. 690 million, and you go back here to 2018, they almost did 690 million. Look at the estimates, we're 689 million. So you're telling me it took, it's going to take 7 years for you to get back to the revenue you were doing 5 years ago. Right? That's why I know you guys like 3D printing, and I know you might like the stock because it's under $10 and you could really accumulate a nice position. I understand, any positive logic that might come in to this company. However, again, if you look at it like that, right, it's going to take you 3 years to do business you were doing, 5, 7 years ago. That's why if you look at it like that, you can kind of see, this kind of looks like a shitty scenario here. Business it's showing here all different breakdowns of income by source, but even the industrial year over year, that's like a 10% drop. The healthcare 306 million down to 261 million, that's over a 10% drop. And even by region, you're not seeing any consistency. If anything, you're seeing decreases year over year. So again, that's why this company seems to be struggling. If we pull out a 5-year chart and just back it up, I just want to show you guys here. Yeah, this is from inception. So this is the low back in 92 to the low of 09. This is our bottom trend line. I seriously doubt it's going to pull back to $3 and change, but this low of 9 coming up to the low here towards the tail end of 2020, you can see that, it did recently bounce off this fib of 697, it looks like. However, in my opinion, it just broke the simple moving average, so it will most likely bounce around and potentially come back down to this bottom fib of 697 and potentially even lower. If it does immediately pull back 660, 670, this is what I'm talking about when I say roughly a 30% pullback, right? 1.4 billion in assets. Half that amount, excuse me, half that amount is in liabilities. So you can say like maybe technically you got like 700 million in assets, right? But they have been, signing a lot of new deals and coming with new agreements to people. CTE connectivity, collaborating on project to make electrical connectors. Signs commercial agreement with Baker Hughes. So if you go back, they're signing, a lot of different agreements. Look, launches bioprinted human tissue platform for non-organ application, launches 3D printer for jewelry production. So the company is really trying to spread out. However, right here, as it says, 3D Systems to merge engineering manufacturing of metal printers in Europe as part of restructuring. See, this is what I mean. These are the things that this company has to do. Sometimes you spread yourself out too thin. You expect a surge in demand, and then it doesn't come. And then what happens is now your supply outweighs your demand, so either you have to, sell and operate that stock as a loss, or you have to do something like this and begin to restructure your facilities and bring your costs down to try to raise up those profitability ratios that we looked at earlier. So the company is doing some good things. One thing I will say again, I'm looking for a roughly 30% sell-off, which would bring us back down to about the high sixes, maybe like right here, this fib even, sub 7, 660, 680. That's roughly a 30% drop. That would bring us down to, about $1 billion. And that, in my opinion, would be about fair value. It does seem like it's like it's kind of uptrending, if you will, anyway, if you look at this bottom trend line here. However, it just doesn't look consistent. So I would actually wait, in my opinion. I would wait. We pull up a year chart. When's the next earnings? May 8th. Estimates of only 127 million. Look at that, coming off of 134 million where they missed. That's why. See, estimates have to keep coming down so they can try to keep the value of the stock up. But if the inconsistency and the expenses are deteriorating the revenue and the profits coming in for the company, then even lowering estimates to 127, like if this company comes in with like 125 million, the stock is going to get absolutely decimated. And that's why, again, it may seem extreme, but you could have a pullback here several months down the road here, going into the tail end of this year, down even to this fib of $5 and potentially lower. However, again, the book value is, what do we say, like 570 or something. So I don't know if it's really going to go that low. However, as crazy as it sounds, right here in this like mid-high 6 range, in my opinion, is exactly where it should be. But I would wait for the company to prove itself with the revenue and with the earnings, coming in the next quarter or two. Let them prove themselves to you before you step in and tie yourself into shares. Because, again, if it continues to remain rocky, Wall Street will have no problem dropping this a clean 30% moving forward. But I'm going to leave it there. So once again, this is Stocks by the Numbers. Oh, actually, wait. Quickly move over to stock charts here. And I just wanted to show you. Sorry about that. I know you guys got excited. You thought we were done. Here on the daily, you can see, look at these bounces here as of late coming off of this 200-day moving average. So that's really your support level here at 975. Bottom Bollinger Band 952. Stock right now 996. So you got a lot of action happening right here within this 40-cent range. The RSI here, 45.4, not really telling us anything. The MACD has been pulling back and selling off. However, it does look like it may be ready to flatten out and potentially get ready for a curve and a potential cross here moving forward. So that's why this level is so key. Look at how it's been bouncing off of this 50-day moving average, switching over here on the weekly. 50-day 998, stock right now 996. Mid-Bollinger Band 976. That's what I'm saying. You have all of these levels right here within the next 30-40% drop. That's going to tell us where this company is going to go. And the fact that it's been holding this for several weeks here, it tells me that if and when, in my opinion, it most likely will break this moving average, it will pull back. And something even here, like a 730, that seems much more realistic, and I would definitely be more inclined to buy shares in the 7s as opposed to almost 10. And it does look like the MACD, even though it has been rising and bouncing, not crossing, it actually does look like, in my opinion, it may be potentially ready for a cross and another downtrend. But that's just my opinion. Of course, sometimes we see what we want to see. You know, I'm sitting here bashing the company a little bit, so of course I'm anticipating a MACD cross downward to continue the sell-off. But again, we looked at the numbers. Men lie, women lie, numbers do not lie. Stocks by the numbers. That's why we look at the numbers. In my opinion, it's going down into the sixes. So I'm going to end it there. Once again, stocks by the numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. If you like the video, thumbs up helps out the algorithm. If you like the content, subscribe to the channel. I'll make videos all the time for you guys. And moving forward, like I always say, I understand that markets are rocky and they're volatile and they're uncertain. So I do want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by, guys. I'll see you in the next video.